Ladies and gentlemen, good afternoon. Thank you for being with us. Thank you for your punctuality. We said 1:30, and I thought, well, they will never be there at 1:30. But you are. That's proof of the interest you have in this conference of today, and we thank you warmly. And I want to welcome as well, people here in the room, but we have to welcome people connected online. And it's not a secret because we can show that. We have 2,300 people connected online. What is a proof of our European dimension. And to organize an in-person meeting is not easy because of the technology we can use today. And that's a good way to address more people all over Europe. And we are very proud of that. Each time we have more and more people connected online for our conferences. And we are happy of that. So thank you very much to all the ones who are connected. And I say hello to all of you with a special congratulations for the abundant Romanian profession. Romania is very strongly represented in the connection. So the topic of today's conferences is toward a simpler, rationalized, and future-proof EU tax system. What an ambitious title, you must think, but only as ambitious as the challenges. And we think that it is the right time to put that on the table. Today's conference, of course, will be oriented toward the future of the European Union, of course, the future of all of us. And we are all focusing on future, especially this year, because as you know, 2024 is a particular year as we have elections, European elections from the 6th to 9th of June. And this event will be an opportunity for the pro-European to reaffirm their commitment to the European project and for choosing representatives who will champion values and aspirations on the European stage. Eyes closed down. This is of utmost importance as the results of the European Parliament elections will influence, of course, the composition of the next European Commission and therefore will build the shaping of the EU policies for the next mandate for the next 5 coming years. So to actively contribute and influence the debate, or at least intend to, ETAF unveiled a few days ago a manifesto setting out our demands, our suggestions, I would say, to the European Commission and to the European Parliament for the next 5 years in order to ensure that the EU tax system is simpler, rationalized, and future-proof. And as it fits perfectly into the topic of our conference, I start by presenting our main recommendations before opening the panel discussion in a few minutes. So the first topic, very briefly, I will not enter into details. You have the documents, we have distributed that. The first topic is promoting the national professional regulation. As a European federation representing the regulated tax profession, you won't be surprised to hear that our first recommendation to the European Commission is to encourage the development of national professional law framework. Today, the profession of tax advisors is not harmonized within the European Union. Professional regulations differ widely from one member state to another one. The spectrum ranges from full liberalization in some member states, for instance in the Netherlands, to a distinguished level of regulation in other member states, like the ones of the ETAF members. As we know more than anyone, the benefits of a strong professional law We therefore ask the Commission to encourage every EU member state, firstly, to regulate tax advising activity, for example, by making tax advice a reserved activity. Secondly, to ensure high levels of access qualification and continuous mandatory professional training. And thirdly, to set up professional organizations with mandatory membership and sanctioning competencies. I mean, let's say illegal competencies. We urge the next European Commission to rather launch a reflection towards this direction and rethink its postponed SAFE, Securing the Activity Framework for Enablers initiative, which would, on the contrary, risk impending well-functioning national professional regulations. The second recommendation regards professional secrecy. To better protect professional secrecy in the EU legislation by ensuring the respect of national rules. Here I want to absolutely be clear. Professional secrecy is neither a privilege nor a favor. It is an obligation for tax advisors to be able to exercise our profession independently, freely, and impartially. Tax advisors are already subject to limits in the use of the professional secrecy principle in their respective national regulation. However, we observed in recent years at European level an increasing tendency to mitigate it or even to cancel it. And we must stop that trend. We also ask for a fair treatment of the tax profession by finding the balance between the treatment of lawyers and auditors concerning the protection of profession secrecy. We have some good examples in regulation, and we should apply them to tax advisors. The third point is regards reporting. In recent years, we have witnessed the introduction of frequent and highly complex tax legislation in the EU, often pursuing the same similar goal, for example, the fight against tax avoidance. At the same time, this legislation generates an always higher reporting burden for taxpayers, their tax advisors, and tax authorities. The current Commission has recently committed to reduce the bureaucratic burden weighing on companies by 25%. Well, let's go. This is highly welcomed, and we hope so. In our manifesto, we state that the next European Commission should turn these words into actions and pursue this effort towards greater rationalization of EU reporting requirements on a permanent basis. And we go often further by saying that not only the European Commission, but all EU legislative institutions should create structures and rules to ensure a consistent reduction of bureaucratic burden. Here, digitalization can help. The Commission could be tasked with designing an EU-wide digital infrastructure for uniform automated data provision, capable of detecting and consequently excluding duplicated or redundant data provision. The main current problematic reporting requirement for the tax profession that needs an urgent evaluation originates from the DAX 6 directive from 2018, which imposes a disclosure obligation by tax advisors for a wide range of cross-border tax arrangements. The fourth point refers to digitalization. The digital age and the development of artificial intelligence have marked the beginning of a transformative phase, presenting both opportunities and challenges for the tax profession, and necessitate proactive measures from the European Commission. ETAF calls for the continuation of the principle, what's illegal offline should be illegal online, and of the country of destination principle, in order to keep the same professional, ethical, and quality standards as traditional tax advisors. With the growing complexity of cross-border transactions and the boom in digital economies, new challenges have emerged, such as taxation of crypto assets and taxation of digital nomads, with more to come, for sure. And we need harmonization of tax rules at EU level on these new challenges from the start in order to avoid fragmentation, legal uncertainty, and tax dispute. The last one, tax education and tax honesty. In recent years, the focus has been put on a lot of intermediaries and their duties. We observed this trend in the work of the European Commission as well in the work of the European Parliament. But what about taxpayers' responsibility? Several studies have shown that taxpayer education has the potential to reduce taxpayers' lack of knowledge, which has been identified as one important barrier to tax compliance. Recent evidence also shows that improved tax morale leads to improved tax compliance. We therefore encourage the next European Commission and European Parliament to continue this effort altogether and create a holistic approach towards tax education. We believe that the EU Tax Observatory could have an even greater role to play in this regard. We also ask EU institutions to launch a reflection at EU level on how to achieve more tax honesty, including to explore more simplification on the tax system and of tax filing obligations, active regret possibilities, and penalty-exempt voluntary self-disclosure. Well, they are our main suggestions, I would say. Many other ideas could be introduced in our manifesto, but we decided to limit the list of our recommendations to reasonable topics possible to be reached during the coming 5 years mandates, and not too many of them. We want to be very pragmatic. For instance, we did not mention the rule of unanimity regarding taxation within the European Union. We all know that this is a barrier to the single market. What we could observe once again when looking for an application for the Pillar 1, but it is regrettably too early for such a step. The mindsets are not mature enough, and the topic will stay by now at the state of vain wish or maybe even a dream. The building of the EU is a long-term process and a step-by-step approach. So thank you very much for your attention. I hope that our recommendations will give food for the debate now. We have a great list of speakers today coming from various horizons to debate throughout 2 panels. The first one will focus on the tax policies under the next European Commission. Which direction will the Commission pursue, and how the composition of the next Parliament could influence the future tax policies? Which destiny for the pending tax proposal, and which development can we expect at the international level? Of course, we will not have very concrete answers to such questions, but the idea is to debate, to exchange our views, and with different profiles of speakers, we can have an interesting discussion on that. And the second panel will touch upon the future perspective for the tax advisors in the EU, which opportunities and which challenges lie ahead for the professional in the digital age. Will the future bring a meaningful reduction of EU reporting requirements? So now I invite the speakers of the first panel to come on stage, and I give the floor to the moderator, Elodie Lamers from Tax Notes. Thank you.
Hi, everyone. Thank you for being here. It's been 5 years that have been hectic on the tax front, with many proposals that have been put on the table. Sometimes, unfortunately, they stayed on the table, so we have many leftovers. I understand that we might have agreement soon on the VAT in the digital age proposal, but also the withholding tax proposal, so faster. And then we have political parties that have published their manifesto. We have this LETA report that came out this morning. And so we're going to discuss what to expect from the next commission. And to discuss this, we have a great panel with us. So on my, I always have to say, on my right, we have Benjamin Angel. I don't know my left from my right. We have Benjamin Angel, who's Director for Direct Taxation, Tax Coordination, Economic Analysis and Evaluation at DG TaxSud in the Commission. I was going to say, and then next to him we have MEP. No, we don't. We have Bart van Kooil, who's president of the Belgian Institute for Tax Advisor and Accountants, and he also has his own cabinet, Van Kooil and Partners. Then we have MEP Isabel Benjuema. She's from EPP in Spain, and you were notably a rapporteur on the, I noted the name of this report, future reform of corporate taxation. And then we have Panayotis Nikolaides, who's Director of Research of the EU Tax Observatory. I will start with a pretty general question to all the speakers, which is what are your expectations for the next mandate? But I'm going to frame this question a bit for Benjamin, because we've seen this morning this LETA report who calls for further tax harmonization. EU leaders are expected to discuss this tomorrow, I think, and we've seen draft conclusion calling for harmonization of corporate tax law, and then those conclusions became harmonization of certain aspect of corporate tax law, so much narrower. And we've also had a tax official, I believe, end of March, telling the Commission to slow down on direct tax proposal. So with this context, Benjamin, could you tell us what to expect? And I've been told to tell speakers that you have to speak really close to the mic to be sure that you're heard. Thank you.
Thank you, Elodie. The first big caveat which I need to make is that obviously we do not know what the next commission will want to do. We do not know who our next commissioner will be and what his preferences will be. And that is a very important disclaimer. So as regards the next commission and the priority in the tax field, I would say the very first priority is first to have what we have on the table already adopted. We have an unprecedented number of tax legislation simultaneously on the table. Some of it willingly, some of it unwillingly, as you alluded to. We would have liked some of them to be a bit quicker, to be honest. So at the moment, if you take direct and indirect taxation, we have 8 texts on the table. That's a lot. You have to keep in mind that there is a limited possibility for member states to discuss simultaneously legislation, and sometimes things become problematic, which would not necessarily be problematic for reasons known to the general public, like the availability of meeting rooms, the availability of interpreters. So you have physical limitation to the number of texts you can discuss. So first, reduce our pipeline. Make sure that what is there is, I hope for all of it, or at least most of it, adopted. Second, it is clear that attention needs to be paid to decluttering. Your president mentioned already also some element related to your profession. DAC 6 was mentioned in the slide. We will launch a general evaluation of DAC 1 to 6 in May. We have been a bit delayed for translation, actually, reason. And we will carry out an honest evaluation. That is, we really encourage all of you to participate, and we will draw the consequences of what is heard to bring the necessary simplification or clarification to the DAX. There are also probably a conclusion to be drawn of the entry into force of Pillar 2, at least for the companies which are in scope. We have a vast apparatus of requirement in ATAD. Are they all strictly needed? for companies which are in scope on Pillar 2. We do not have the answer now, but it's clearly a topic which is worth examining more closely to see if there are some areas where we can bring some simplification and make things lighter. Then you have some topics which are a bit trendy. Will they lead to some initiative? I don't know. Obviously, it depends how things evolve. For instance, treatment of cross-border worker. You will, when you meet the business association or the member state, everyone agree that the teleworking is here to stay, and that it has brought a structural breakdown in the potential impact it has from a tax field. We have moved from potential issues affecting thousands of people to an issue which affect potentially millions of people in the European Union, which runs the risk of meeting the tax residency of several member states simultaneously and face a very complex situation for them, for their employer, and for the member state. The Belgian presidency has re-initiated a task force gathering the vast majority of member states to discuss it. But we are very much in a situation at the moment where everyone agrees that something needs to be done, but there is no agreement at all on what needs to be done. So clearly, discussion need to continue before even envisaging a legislative action, because if we were to put a proposal on the table now, most likely it would go all over the place. So this is just indication of possible element. We have to keep an eye also on the development in the OECD field, because very often we have legislation materializing OECD development. And the fight against tax evasion and aggressive tax planning and deepening the exchange of information will for sure remain a priority. And when we had this exchange with member states, they indeed showed limited enthusiasm to have more direct taxation tax on the table, primarily because they want to chew what is already on the table, which is an understandable reaction. But they all stress at the same time that getting more information and fighting tax evasion is a no-brainer. So by definition, everyone wants it. And you know that each time we table a DAC, usually it's adopted in extremely short time. So it is not controversial. It doesn't mean that we should do whatever we want, because we have to keep in mind that each time we collect information, someone has to send it, and we should not come with an excessive burden on the stakeholders.
Thank you.
Thank you. I'm going to quickly turn to Isabelle Benjoema, because I assume that the next composition of the next European Parliament will influence the agenda of the President and of the whole Commission. So can you tell us what your expectations are?
Well, first of all, thank you very much for the invitation. It's a pleasure to be here today. Well, as has been said, we don't really know because we don't have the crystal ball, but of course, what we have from the outcome of the polls is that the Parliament composition is going to vary quite a bit from the composition that we have right now. And it looks like there's going to be a shift to the right, and that there's going to be a larger presence of anti-European parties in the Parliament, which have a more nationalistic approach for the policies. And there's also, right now with the polls in the hands, we'll see what the outcome is on the elections. We do see that the Greens are going to, looks like they're going to lose also representation. And this is an important fact if it happens at the end, because they are the ones who have been pushing hardly in many of these legislations that have been mentioned, that they've been important for this mandate, but they're also still on the negotiating table for the next mandate. I do believe that during this mandate, if I may, we have, looking back a little bit in order to tell you what I believe is going to be the next mandate, there has been a huge pressure and a huge push forward, because they were able to build those majorities from the left, being able to build coalitions among Greens, Renew, Socialists, sometimes with the support of EPP, many others without the support of EPP, to be able to push with a very ambitious agenda towards total harmonization. I believe that that won't be the case on the next mandate if we have the composition that the polls believe that we would have. I think there's also another important thing to bear in mind, which is the composition of the council. There are moves right now in the heads of the prime ministers or the president of different member states that have also been that means change of political parties, and that will definitely also affect to the negotiations, because I think that this aim for harmonization sometimes has turned to be always a harmonization at the top level, trying to raise taxes and build new taxes. And I believe that the language of coordination, exchange of information, simplification, and competitiveness will be the key words in any tax negotiation in the next mandate. I do believe that there are essential issues that need to be resolved, and for instance, everything regarding the pillar 1 and pillar 2 needs to have further discussion, but especially right now there's a commitment, and we need to fulfill with that commitment. But there are many other big discussions that have been very political during this mandate regarding taxing the financial system, taxing the banks, all the windfall taxes debates, all those tax the rich, all these taxes that have been constantly put into the table in the debate in the parliament, that I have my doubts that they'll be able to, if the majorities look like the polls show right now, and taking into account the new shape of the council, that they will be able to push forward. And two final comments just for further debate and discussion is that I believe that the independence, the capacity of each member state to design their own tax policy will again become a big say for many of the member states, and they will want to have their independence. And we don't have to see that as a threat to coordination, simplification of exchange information. And I think that's essential, because I think right now anyone who dares to say they want to have their own say on how they want to build their own tax policy, they say they go against that harmonization. And I believe that that's going to be also, we'll have member states now saying, well, I want to lower taxes. I think I want to be more competitive using my capacity to develop my tax policy. And let's see how the rest of the players react to that shape, because I think it's going to be quite different from the one we had before. Thank you.
Thank you. Yeah. Oh no, you can start. Thank you.
Well, maybe I should add the economic perspective of things. I think this is what I can bring to this debate, because we started with Benjamin. He explained very well the Commission side, and then we saw the political side. And many of the things in taxation are dictated pretty much by the economic conditions that would develop in the next 5 years. So I think this was also the main driving power. If we go back, the last 10, 15 years has been a period of constant crisis. First the economic crisis, then the COVID crisis, pandemic, and so on. And then also the cost of living, the energy prices increases. So there is a constant need of countries to generate new revenues. And this defines essentially what we need for taxation. The conditions are not the same as they were 5 years ago when we had the energy crisis and the pandemic. And it's not the same for 2 or 3 reasons. One, interest rates are a little bit higher than they used to be. At the time, interest rates were very, very low, and so countries could borrow very easily. Secondly, many of the countries have used their buffers, and so they would need to rebuild them. These tax changes won't happen in a vacuum as a result of these changes that we're facing in the world. And maybe thirdly, we're facing also a geopolitical crisis, which would mean increases also in defense expenditure, on top of everything else that we have to take into account: a rebuilding of buffers, the more difficult conditions to borrow, and the geopolitical conditions that prevail in the region. And so there might be a need for countries to raise more revenue. And the question is, where are they going to come from, if there is a need to do so? And there are a few low-hanging fruits that we think, as economists, exist in the economies, because it's also a question of what do you tax? Do you tax something productive, or do you go for something that would increase fairness but would not harm the productivity of our economies? One of these low-hanging fruits is what has been now done with Pillar 2, just improving it and building on it and addressing the loopholes that have existed in negotiations. And maybe it would be a right time, especially if countries would be in need of new revenue generation, to come back to the table and renegotiate. And to be more specific, I'm talking about reconsidering the effective tax rate, the minimum, the global minimum tax at the 15%, which is easier to renegotiate a little bit upward. And we should be very cautious on what happens in a dynamic environment now that has been implemented. Do companies use the substance-based carve-outs? What is the effective tax rates that they actually pay? We should go and recalculate once we have more information now that the Pillar 2 will come into effect. Secondly, there are taxes that have not been used, and it's easy to find new revenues. And I'm talking about a global minimum tax on the billionaires, or maybe multi-millionaires as well, something that we have been advocating for some time now at the EU Tax Observatory. The discussions have started at G20, and I think they will slowly trickle down. And why not the EU could lead in this respect. And then thirdly, the Commission agenda, the small things that exist here and there. I agree with Benjamin that we should clear the existing files that are on the table, because they do make a difference if everything progresses and everything happens. So let me put the full stop here. Changing economic conditions, the need to rebuild buffers in the coming years, and this is what will define, instead of in addition to the politics in the administrative initiatives, what we will see in the next 5 years.
Thank you.
Yeah, thank you. So like this. I've made a wish list for the profession, of course, to the European Commission. The first thing I want to say is we wish for the EU Commission that builds on trust with taxpayers and intermediaries, especially regulated tax advisors and accountants that follow strong ethical code of conduct. Regulators should focus on their effort on preventing misbehavior of unregulated intermediaries and set a new ethical level playing field for the intermediaries, and trust regulated intermediaries more. And I hope that the EU Commission will trust us more and assess future regulation with the advisors on the field like us, and also with organizations like ETAF, European organizations. Secondly, in my wish list, I hope to focus that will be of the Commission will be making on tax law and tax compliance easier for businesses, as well for the tax advisors and the accountants. And that taxpayers are confronted today with so much different regulations, evolving so fast that they struggle to make themselves compliant as they are overloaded. This is true for taxpayers active internationally, but also for the local small and medium enterprises that have more difficulty to invest in compliance. Speaking of overloaded, to be honest, in the preparation of this panel, I was asked to reflect for more on the what's in the coming policy initiatives of the European Commission. And this, let me be honest that my fellow accountants and tax advisors in the field, I have not enough time to follow and to analyze all the new things that are coming onto us. And finally, as a third one, I wish for the Commission that will focus on clarity of the regulation and make regulation less controversial and less uncertain. The multiplication of challenges against the regulations to local and European courts of justice and are creating a lot of grey areas, and that only benefit for people who try just to abuse them.
Thank you. I would like to quickly talk about the legacy of the current Commission. So we had this proposal to tackle the misuse of shell entities and shell that is more or less blocked in the Council. Member states now want a simple exchange of information on this issue, and I think that the Commission had to decide at some point if it was too far from what you initially proposed. What's the next step for this? And linked to that, and it's part of the ETAF manifesto, they don't really like the SAFE proposal that has not yet materialized. And also the YESBA this week published ethical standards for tax planning. On those two specific issues, can you tell us a bit where we're going?
Sure. First, we welcome the publication by YESBA of ethical standard. I think it's an important step in the right direction. As regards Unshell, I would have certainly preferred the discussion to be much quicker. And we are here in a territory where the European Union is a very uncomfortable situation. Among the things I'm in charge of, there is a list of non-cooperative tax jurisdiction, which is usually nicknamed by journalists the blacklist. We enforce economic substance criteria on zero and low tax jurisdiction. And normally, for all things related to the listing of third country, we have a very sound principle, which is we do not ask other countries to do things that we do not do ourselves. And this is true for everything except economic substance, where we do not have economic substance legislation at European level, certainly, or even at all in some member states. So it's high time that we clarify this, because it's difficult to take the more high ground and to preach the rest of the planet what they should do when we haven't done our homeworks. The discussion will restart, still under the Belgian presidency. We are in discussion with some member states on assessing how it can be recalibrated. Clearly, the pace will be slower than the one we had in mind originally as regards the forthcoming step. But I take comfort in the fact that no member state at this point say that they do not want legislation on shell companies. So this agreement is still on what is it that we do, not on whether we should do it, which is an important distinction, because unfortunately in the tax field, there are multiple occurrences where member states just say we don't want it, period. Maybe unhappy, but at least it's clear. This is not the situation that we have on Unshell. Now, on the issue of regulating the tax intermediaries, the Commission has announced indeed that SAFE would be postponed until the adoption of Unshell has taken place. I think it's fair to say that when this announcement was made, maybe we were a bit more optimistic on the time needed for getting Unshell adopted. The topic will not disappear. We are still convinced that it is important to have a behavioral rule on tax intermediary, if only because the tax intermediary is the one having the knowledge. So when you see very complex and fishy structures in an exotic tax haven, it's almost never the taxpayer itself who was able to elaborate it. It's the one who was in a position to advise the taxpayer who is behind it. When a famous Colombian singer prosecuted by the Spanish Treasury for having shell companies in Panama, I very much doubt, with all due respect to her, that she had the personal knowledge to create those shell companies themselves. So if we discipline those having the knowledge, we hope to be able to diminish the occurrences of those dubious practices. So the importance is still there. Now, obviously, this will not happen under this commission, and we will need to discuss with the next commission what is it that they want, whether they're still comfortable with what we have in mind, or if they want something different. That time will tell.
And just to stay on the topic of the legacy, should we expect anything under this commission? I remember the talk of 9th Directive on Administration, Cooperative Administration, for example, for Pillar 2. Is this expected before the end of the mandate or no?
Well, my answer will probably be different from what it would have been a month ago. A month ago, I would have said, yes, very likely that we have a DAC 9 still before the summer. But the one condition to have a DAC 9, which for those of you which do not follow closely the topic, is not here to bring novelty, is just here to accompany the implementation of Pillar 2 and its administrative guidance to facilitate the exchange of information between member states and avoid a situation where companies would have to report in multiple member states instead of one, and then that member state exchanging information with the other. So the idea here is clearly to bring simplification and avoid multiple reporting. But for us to be able to shoot DAC 9 on the table, we need the work in the OECD to stop on the administrative guidance. And each time we think it's about to stop, then it continues. So we face this difficulty. I don't know when it will stop, honestly. I was a bit surprised to see that the OECD has announced a calendar of work also for next year. For countries which have not implemented Pillar 2, it might be an interesting intellectual discussion, but that is not our case. We, European, we have legislation, and it is challenging to see ongoing discussion on something which is already legislated for us. And that creates a very significant complexity for member states, for tax administration, but also for businesses, because the fine print keep on adding. I think we have reached almost close to 1,000 pages of administrative guidance, and we need a point in time where we will be able to confidently say, that's it, we have our administrative guidance, and now we can put on the table a text to smoothen the implementation of this administrative guidance within the European Union. So this is a long answer to explain that no, the DAC 9 will not come during this commission, because the OECD work is still ongoing, and it makes no sense to table legislation if the content of the legislation is still being discussed in Paris.
Thank you. Isabelle Benjoima, I would like to ask something about the manifesto of the EPP. So unfortunately for you, but fortunately for us, a draft version leaked in January, and that draft version actually called for a digital service tax. And this specific proposal is not in the final draft that was published. So I was wondering if you could walk us through the debate within the EPP on this specific issue.
Well, draft papers are draft for internal discussion. I'm always very sorry when I see a leak, so I won't comment on a draft paper. I will never do that. I always comment on the final version after long discussions, and that's the ones that we officially can comment on. And I'm very sorry when I see leaks also coming out from the Commission, and we suffer it constantly, so I'm very disappointed that can happen. But I'm glad that it's not in the final version, which is good news because it's something that we, especially the Spanish PP, has fight for always, and I think it's important, especially taking into account the experience of what has happened in Spain with that kind of taxation, which has proved zero or near to zero capacity of collecting taxes with the digital taxes that the Spanish government put in place. So if I may jump, first of all, just a few comments on Shell. I totally agree on that there's an agreement that there's a need to do a common action from the Commission side regarding Shell companies, and that's good news. And the big question on how and what, I think that with this new Commission, and again, taking into account the landscape that we will have, it's essential that we prioritize the creating a clear rule book, a clear framework, because if not, we will, especially in the Parliament side, enter in an endless discussion full of political visions and political claims that will difficult very much the final outcome, which is that we really want to make sure that within the territory of the European Union, there is no room for Shell companies, and that those third countries that we operate with, they have to fulfill the framework that we approve. And I'm very worried about a very complex and politicalized debate that may occur at the Parliament side, and that make it very difficult to move forward on that legislation. If I may, I wanted to comment on that. And on digital taxation, for me, it's the question is larger than each of the initiatives that we have on the table, which, by the way, we should remember the commitment of the President Commissioner of one in, one out, which we haven't really fulfilled during this mandate, and hopefully we will do it on the next one, which is right now we have a lot of very clever and intelligent people putting papers together talking about the need of making Europe competitive again and really talking about competitiveness. And I really question myself with for instance, with digital taxation, we are making Europe more competitive or not. So I think that the driver for any discussion from the political side in the next mandate will be whether or not it is helping to make Europe more attractive for investment, is helping to create jobs, and is making our companies more competitive. And I think that's the thing we should have on our head, with another outcome, another priority that we have proven that is a priority for the European Union. It has been for the Commission. It has had a very important support from the Parliament side, which is the fight against money laundering and making sure that we don't have any tax havens within the European Union, but labeling rightly what a tax haven is, and not trying to use the label to point out any jurisdiction in a member state that we don't like as a tax haven. And now in Spain, we have a huge debate, and I want to bring in now, which is Gibraltar. Gibraltar, after the Brexit, is no longer EU territory, but it's in the border with Spain, as you very well know, and it's one of the largest tax havens, where you have the largest amount of gambling companies, because they have the lowest gambling taxes. You have a lot of Shell companies, and you have it's the third highest richest country in the world in rent per capita, and it only has 30,000 members, inhabitants. And are we really going to allow to have that territory in our border and give them access to our market that will go against the competitiveness of the European market, what we will have to fulfill with many legislation? That's a question that we also will have to answer during the next mandate. But concretely to your question, I'm happy it was not in the final version. I don't think it's the way to move forward, and I think it goes against the European competitiveness of the European companies, by the way, which is there are many other ways to fulfill it. And if I may answer to one of the comments that you said, of course there will be other necessities and other priorities, but we can also reconsider, which nobody does when we talk about taxation, about lowering the budget in things that sometimes are useless and don't have an impact. And another important thing, which is, of course, how will the new fiscal rules affect to the taxation, in order that many countries will have to be able to comply with the debt objectives and the deficit objectives. That will be also very interesting to see.
Thank you. I would like to come back quickly to Benjamin, since you mentioned Gibraltar and the scope of the screening process of the EU list of non-cooperative jurisdiction for tax purposes. You see, I didn't say blacklist. Was just reviewed. What do you make of the case of Gibraltar or countries that are not covered yet?
We have restarted this year, actually, the geographic extension of the list of non-cooperative tax jurisdiction. We have added this year 3 countries on top of the 95 which were already there. This year we have added Kuwait, New Zealand and Brunei. And we are about to discuss with member states, probably before the summer break, on a revised methodology for determining who would come next. Knowing obviously that when you are in scope, it doesn't mean that there is something wrong. It just means that we are looking into the system. For instance, a country like New Zealand, I would be very, very, very surprised if we detect something problematic. I think New Zealand is very like-minded in its attachment to tax good governance, but we need to decide who would come next. And I cannot anticipate this discussion. This discussion will take place in the coming months.
Thank you. Panayotis, the 2024 Global Tax Evasion Report says that a persistently large amount of profit is shifted to tax haven, $1 trillion in 2022. We were just discussing the EU list of non-cooperative jurisdiction for tax purposes. Do you think that we should go further in what we ask non-EU countries to do?
Well, firstly, on the list, we do have, just to comment, we do have ongoing work because we believe that some of the criteria should be economic, and there is a question of how much discretion do you have, or how much do you ground the criteria into economic fundamentals. So we will try in the coming months to come up with our own version of a list based on what we believe should be in, but also going back in time and seeing different countries or different lists that existed, and what is the difference that these have made. But we will bring it also to everyone, because we'll try and make it as interactive as possible, so that people can go and see which of the countries and how these have changed over the years. So this is the one. Now, if we should ask countries to do more, I think there is scope. There is scope. There is scope within the EU, firstly. So we should try and sort our house first. But many of the legislations that are on the table, for example, the Unshell Directive would go into this direction. The Enablers Directive, I think, would address many of the issues that we have within the EU. And then many of the things, unfortunately, in the lack of multilateral cooperation, must be done a little bit unilaterally. And I will comment, for example, on the DST. I think it's a response to the fact that the legislation on Pillar 1 is not moving in some other countries. And for this reason, countries feel the need to do something. And we have examples in the past of unilateral legislation moving the process. The CRS, for example, was a result of FACTA coming in, a unilateral policy by the US. And so sometimes when we try to form policy in other countries during unilateral measures, I think there is a lot to be done. Just to say something on the DSTs in relation to what Isabel has said, we have put together some numbers. I don't remember now the Spanish numbers, but we have pulled together the numbers of DSTs, at least in Europe. And we find that what the countries would get is more than the revenue from Pillar 1, for example. So it does have a revenue impact. It's just second best sometimes because of the lack of coordination at the international level. So short answer is if we want to move something and if it becomes a priority, then yes, let's legislate unilaterally in order to move forward. If the debate is at the multilateral level, then let's do that.
I will ask the Commission later on DST, but I just would like to go to Bart. And so Benjamin mentioned SAFE, and this proposal, it's been announced that it would notably contain a definition of aggressive tax planning. And I'm wondering if it's not something that would actually make your life easier as tax advisor.
Well, the difficulty with SAFE, that it's a list, and then again a list supplementary on all the lists that exists in different kind of countries. We have just spoken, I've heard our president saying that let us look to all the regulated professions in every country. When we want to make a double list, it's a double burden that we make for the persons who are already registered in a country, and therefore it would make life easier. Could make life easier, but the only thing that we need to do is to look to the national countries, which has at this moment the member state that doesn't have any regulation, that they regulate their profession in correspondence with the EU regulation that could come. But on the other hand, that we don't make a double registration of all recognized persons, because otherwise, how are we going to control that? Is there a double control on that list, which responsibility is behind, and so on? So it's better that we have a regulated organization in a country, actually like we have, that other national countries which don't have at this time a regulated organization, that they made it a mandate obligation for everybody, and so on, then at that moment SAFE would be in favor for everyone. Also because there is no tax need, quite good. I make an example. In Belgium, when we looked to the problems that we have with the papers, the Panama Papers and so on, and we looked to all our members, which kind of members were involved, are they recognized with our institute or not? And it was very clear and very quickly that we could see that one person was involved, one person recognized by the institute, and immediately he was sent to our independent court, which is connected to our ethics, code of ethics, and disciplinary, he was immediately removed on our list because it was unacceptable what he was doing. And that is the difference. If you look to all the papers that were coming, and there were a lot of persons involved, unfortunately, in Belgium. And if we're looking to the person who were involved, they were not listed to the list of tax advisor. And that's a very sorry, because in Belgium, it's not an obligation. It's the title which is in Belgium organized, and not the profession as itself. And when we were looking, they were not on the list, but executing the profession of tax advisor. And in the SAFE, when everybody would be on the list, at that moment, it would be organized with the code of ethics to respect for everybody, and it would be a profession in advantage, but also, and the most important, for the enterprises and for inning the taxes that were needed, that we now miss of persons who were involved, which were not organized and organized with a profession. The SAFE could be an advantage for everybody.
Food for thought, I guess.
But it must be adapted, the text that is now going on.
Thank you. Going quickly back to DST. So we have Pillar 1. We're not really sure where we're going with this. We don't know who's going to be in the White House after the election. Is the Commission, does the Commission stand ready to come back with a DST proposal should Pillar 1 fail? Or maybe is the solution in the UN? I know that we're afraid of what could happen in the UN, but how are we dealing with this uncertainty?
I don't want to enter into a speculative discussion. Our priorities remain the finalization of the work on Pillar 1. Pillar 1 does include a commitment for the time being to stand still, and once it enters into force, to roll back DSTs, and that is the priority. It is clear that it's not only a question of how much money we would get. I agree with Panos that if you look at the figures, most likely the countries would get more money from DST than from Pillar 1. But Pillar 1 as constructed is a first step. You know that the turnover threshold is supposed to get down, so the money generated by Pillar 1 would increase over time. And beyond the question of how much money is generated, it's also a coordinated attempt of the international community to reconstruct the international tax system around new principles. And as such, it has value. Not everything in the tax world is about how much money you get. You have other elements that you have to take into account. If you have a multiplication of DSTs, and I remember the work of the EU Tax Observatory, I think you counted 12 countries with DSTs today and 19 with legislation in the pipeline. Inevitably, you will end up with a high number of double taxation cases because those DSTs will be calibrated and constructed in different ways. So there is value in finalizing the work in the OECD on Pillar 1. And you mentioned the United Nations, the very clear position which has been expressed by the European Union as a common position endorsed by the COREPER is that we do not want the work in the United Nations to duplicate or undo what has been done in the OECD. That remains our line.
I would like to talk about individuals, but before I go there, one certainty in the next commission is that one of the focus will be on decluttering. You mentioned a DAC earlier on the upcoming assessment of DAC, but I was wondering, because when the Commission promised to rationalize reporting requirement, they opened a public consultation, and in that public consultation, many stakeholders, including the ETAF, asked for ATAD to be reviewed, actually, for the CFC rules, Control Foreign Company rules, and if I remember properly, hybrid mismatches. I was wondering if at this stage the Commission has identified either in ATAD or even in BFIT provision that would duplicate with Pillar 2.
Duplication would probably be an excessive word, but we have to look at some of them and decide whether they are still needed. And that is a discussion that is yet to take place. The work has just started. It's a legitimate question. And this is not a question about ATAD in general. It's a question about whether all the requirements of ATAD are still valid for the companies which are in scope of Pillar 2. Keep in mind that Pillar 2 has a turnover threshold of 750 million euros, so it's not every company which is in scope by definition, it's only the big multinational. For those one, maybe there is some room to make things lighter, but we have to do the analysis first, and then we have to discuss it with the next commission before coming back to the legislator with proposal.
And should this process also be driven by the OECD? Because the OECD has been using that decluttering term, so maybe they should first come and say, oh, on BEPS, this is not needed anymore?
It is clear that in some cases, the origin of the rule is in the OECD. In some other cases, it has been a local add-on of the European Union. So I would say it's useful that we look genuinely into it, both in the OECD and the European Union.
Thank you. Isabel Benjuema. Benjuema. Sorry. I should make the effort. But I've been called Lamer earlier, so... I was wondering, because we have this remote workers, cross-border workers issue, we have the digital nomads, we have this call for a wealth tax. Do you think that the focus will shift from corporate taxation towards individuals in the next mandate?
I'm sure. Oh, sorry. I'm sure the debate will be there, but I hope not. if I were the one to decide. I don't have the figures. I don't know if the observatory does. And by the way, I'm happy to share with you the ones on the bad performance of the digital taxation in Spain. But so I don't have the figures, but for me, from my perspective, each time I listen the debate on we're going to shift from corporate taxation to wealth taxation, for me, it's something very scary to hear, especially coming from Spain, where we have this huge tax pressure over the taxpayers. If that would move to the whole European Union, it would be a nightmare. So, but I'm sure the debate will be there, if that's your question. Whether or not it will shift, I hope not. But again, it will depend on many factors. But again, at the end of the day, one of the things that has shocked me the most on the debate about taxation here in the European Union is that we constantly forget that indirect taxation is a competence that belongs to the European Union, but the rest of the tax policies remain as a mandate, as a capacity for the member states. I believe that next Monday we'll have a commission that hopefully understands better that we cannot have to try to impose that word that I don't like at all, which is the obsession about harmonization. We really need to make it sure that we create a really simple framework and that we have the best exchange of information, the best possible exchange of information, the best cooperation, and the best supervision to make that happen, which is essential. But when I hear about the European Union talking about wealth tax, for me, I get very scary. So I hope it's not the case, because it's not what the European Union should be doing. That's my perspective, and that's how I see it. But for me, again, the big question is how much do we think that the figure of the digital nomads, not the self-employed guy who goes with his computer, that these companies that they can operate from anywhere. I would like to see the figures. I haven't had access to them. I'm not an expert on the field, but definitely, first of all, I would like to understand how big the impact is, first of all. But again, in any case, each time I hear the word on the wealth taxation, it scares me very much, especially coming from Spain. And if I may, just one comment that I forgot, and I think is important for us, is that we will be facing the own resources debate next mandate. And we will be facing that, and that means creating new European taxation as well. And let's see how we deal with that, and how the new Commission deals with that also will be a challenge.
Thank you. Panagiotis, can I ask you the same question?
Sure, there are many things that I could say. Probably the first comment is that the two, corporate taxation and the individual taxation, are not mutually exclusive, at least in also in working on, but the fundamentals on it. So working on one doesn't mean that the new Commission and the new Parliament won't have to work on it. I think both need equal emphasis. Secondly, we have done more on corporate taxation in the past 10 years, and that's why maybe there is more to be done. We're starting from a lower base on the individual taxation, and we're talking about individual taxation of the very, very rich. Why? Because they tend to shift their wealth around. So it's very easy. The data that emerges, and we have made them available in our latest Global Tax Evasion report, from 3-4 countries, but we plan to plot them for as many countries as possible, and they show the same thing. The effective tax rates that individuals pay across the income distribution is more or less the same, about 20, 30, 40% depending on the country. But then it falls sharply when we come to the very top. And why does this happen? It's because very, very, very rich individuals, a handful of individuals, can shift their wealth around and can hide their wealth around. So this is an area that needs international organization, multilateral discussion to be addressed. And it's the third thing is that it's easier these days. In the past, the counter-argument was, if we implement it, then they're going to shift their wealth. But okay, this is not the case anymore because there is more information. We can trace wealth more easily. There is exchange of information. We can extend this exchange of information. There is exchange of information in financial information, for example. It can be exchange of information also in other types of assets. So it's much, much easier these days to implement a wealth tax and discuss a wealth tax at the global level without having the behavioral responses that there was a counter argument in the past.
I think you have to leave us.
Yes,
Okay.
now it's working. So sorry. Yeah, my team was making all kind of gestures. So I'm very sorry. I have to leave. We are actually debating our position on the last vote that will take place on Econ Committee tomorrow, and we have an internal discussion on to decide the vote. So I'm very sorry. I have to leave. It's been a pleasure listening to all of you, and hopefully I'll be here soon. So
Thank you very much. Bart, I'm wondering, is there an opinion from the tax advisor perspective on shifting the focus from companies to individuals?
No, at this moment not, because it's not an execution of a law. It's making a political decision that we need to make. And as the thing that we don't do as an organization of that profession is intervene in a political decision that needs to be done. But when it's not applicable in the practical way, then we will intervene and say it's not possible.
Okay, and from the Commission perspective, do you believe you have the means to further this debate?
Well, it depends what you're talking about. First, there is a question of what is the appropriate geographic level for dealing with issues such as wealth taxation. I think the best level, but not the only possibility, is a global one, for reasons that Panos has explained. So in that sense, it is interesting that the topic has been discussed by the finance minister at the G20 with a presentation from Gabriel Zuckman. It is interesting that it was discussed in the Economic and Social Committee of the United Nations recently. So clearly there is more attention to the topic than there used to be. And I think a situation where billionaires end up paying less taxes than their secretary is suboptimal, to put it mildly. Whether there would be appetite for action at a different level is very much untested and would be a political decision that would belong to whoever is in charge after the election. On the topic in general of taxation of individuals, clearly, there are already some discussions which are ongoing. When we're talking of the taxation of cross-border worker, that is an issue of taxation of the individual. Some DACs very clearly are about collecting information for the implementation of the personal income tax. So it's not that we are in a complete no man's land. Whether we should go beyond is a legitimate question. We have tried in the past, for instance, to have an extension of the mandate of the Code of Conduct to cover some aggressive practices aiming at attracting high net worth individual. Unfortunately, this did not go through. We still think it would be a good idea, to be honest, because no one benefits from some kind of beggars thy neighbor policy or from multiplying sweet deals for people which have all the financial capability that makes those sweet deals unnecessary.
Thank you. I'm just going to check if there's maybe one, maximum two quick questions from the audience. Don't be shy. There's one question. There's a mic. Okay, great.
Thank you. Raluca Yanaki, KPMG. Wealth taxation is something that I don't know a lot about. And I think the arguments for wealth taxation sound nice, but we as tax practitioners know that not everything that sounds nice on paper is actually economically feasible. So I wonder, and maybe it's a question for Panos, if data really shows that wealth taxes work. And also, I recently read a study that said there's not as much migration of wealthy individuals as we thought there was when wealth taxes increase. So it's an honest, open question. Is this the right answer? Is it supported by data, yes or no?
Thank you. I'm just going to check if there's another question in the room so we take them together. Oh, we can all sing. Is there a second question in the crowd? Then Panos, you can take the question.
Well, the evidence, I can cite two evidence, and maybe a third comment on the first argument, if there exists information and data. The first evidence is that in countries like Spain, for example, which was mentioned earlier, there is an exemption, Madrid, who has a 0% tax. And what the research shows is that indeed wealthy Spanish individuals find ways to register an address in this location. So there is indeed the movement of individuals to favorable locations. This is one. The second piece of evidence is what I said. So if you take the amount of income that individuals have every year and you divide by the amount of taxes that they pay, it's more or less the same in all the countries that we have seen. There are not many countries, but the pattern is pretty much the same. And I encourage you to look at this graph in our global tax evasion report, where we have pulled together the countries that we have. It's France, US, Netherlands, and there is another country, Italy, that some other researchers have done the replication. And they seem pretty much the same. I don't know why at the very, very top, the taxes that they pay drop to 0 or 0.5%, whilst for everyone else stays at 20 or 30%. But we have a very good clue that they shift around. And then the third point of having data, if they have worked in the past, well, the conditions were different. We have some wealth taxes, for example, that happened after the Second World War, after the First World War, to patch up the economies of countries. But these were different times. Today, we have a lot more information. We have information, we have exchange of information, and it's easier. We have the multilateral structures to discuss these issues at the global level. The G20, the G7, the UN, the OECD. So it's much easier these days to come up with a solution to this problem. Was another point that I wanted to make. Maybe the fact that in terms of fairness and to build tax consensus, I think will help people a lot. Individual taxation is very salient. More salient than companies. So you have news that come out of individuals that don't pay. And I think this has a negative impact, and it does affect our democratic debates going forward.
Thank you. Yes, sure.
And I don't want to contradict Panos, but just to, I would be slightly less positive on the easiness of doing it. Because on the one hand, we have the obviously the exchange of information, which is important, but we still bump into the fact that many of them organize their wealth via a very complex cascade of shell companies. And today, we are not well equipped to address it. There is a lot of opacity. And second, the treatment of beneficial ownership which is connected to this topic, because you need to know who is behind, is progressing, but I would say it still is in its early days. So we are not globally where we should be in terms of ability to identify who is the beneficial owner, and more important, who is the ultimate beneficial owner, and to exchange the information. So these are clearly areas where progress is still needed at global level.
Yes, I would actually agree. If I can
Really
come to
quickly,
if I can come to a consensus, I would agree with this. And the task would be the ideal task would be to work towards a global asset registry where this information is gathered, and as a second best, exchange information as much as possible. But this is a debate that would go forward. And usually, when we create a new tax, we create also the structure, the data structure, the administrative structure, the sanction structure that goes with it. So these are all elements that will have to come together, probably not in the next year, but in the next 5 or 10 years.
Thank you very much. We're a bit behind schedule, I think. Thank you very much to all the panelists. It was really interesting. And thank you, obviously, to ETAF for organizing this conference. And I don't think we have a break. I think we go straight to the next panel.
So maybe we'll start whilst the two panelists that are online are joining us. So I just want to introduce myself. For those who don't know me, I'm Jacomien van den Hurk. I'm PwC's EU Public and Regulatory Affairs leader. I'm not a tax expert at all, but mostly look after corporate reporting and audit and assurance. Thanks for ETAF for inviting me to moderate this panel with very distinguished panelists. So when I read ETAF's manifesto, there are a couple of themes came to mind that we could discuss today. One of them being complexity. So the first panel has addressed that to some extent, but we can still talk about the implications for tax advisors of that exercise that is ongoing. A second theme I thought was interesting is the increased demand for transparency around a company's tax strategy. I did read an interesting article from Pascal Saint-Amans on that tax should become a board issue that is of strategic importance to a company. So maybe we can explore that theme. And last, as Philippe referred to in his opening speech, digitalization and AI, what impact does that have for the work of the tax advisor? There are some statistics floating around that 50% of the work would be impacted by AI. I already heard some colleagues saying that their CFO clients had asked them, so why is my tax bill reduced by 50% if I read these statistics? But anyway, we think it's mostly the work rather than the jobs that will disappear, that will be different, sorry. So, as I said, distinguished panelists, I'm pleased to introduce to my right Anna Xavier, Head of Unit and DG TaxSud for Economic Analysis of Taxation, Impact Assessment and Evaluation Support. Florin Thomas, Expert Accountant and member of the body of Expert and Licensed Accountants of Romania. So welcome. I don't think we have anybody yet behind, but maybe you can project them. Perfect. Maybe I will sit here actually, so I can see you. So welcome, Pascal Saint-Amans, former director of the OECD Center for Tax Policy and Administration, fellow at Bruegel and partner at Brunswick, and Sean Bray, director of European Policy at the Tax Foundation Europe. Thanks for joining us online, both of you. So maybe we'll first start with the topic of complexity, or maybe I should say fragmentation, as Mr. Letta called it in his report that was released this morning. So we've seen many corporate reporting requirements emerge, as the first panel discussed, some as a result of international, some national, and some EU requirements. And there are many calls for consolidation. Member states, businesses, The Commission has committed to reduce reporting requirements by 25%. So the question for the panel is to what extent that could apply to tax-related reporting. And Anna, I wanted to ask you first on the approach that you're taking in the economic analysis unit on which tax initiatives could benefit from a reduction. Thank you. You just talk in the microphone.
Okay, thank you very much and good afternoon, everyone. And thank you for the invitation. I was just telling Benjamin that usually people invite me to present graphs and complex economic analysis. And today I have a different audience. But okay, it's good to have a challenge. And so here I am. I'm very pleased to be here. So in terms of complexity, so I think this is there's several points that I think are important to be made. So indeed, the president of the European Commission, President von der Leyen, she has made it very clear that she is concerned that the reporting requirements weigh very hard on businesses, and therefore we must reduce this weight so that this contributes also for our productive capacity at EU level and therefore our competitiveness and growth. So we have taken this very seriously across the Commission. We have to reduce in 25% the reporting requirements. There's a very serious exercise ongoing. All services have to identify potential areas where reporting obligations could be eliminated or merged or made different, made easier. And now the second part to it is to actually put a number to this reduction. I think in this we have to distinguish two things. That's my second point. Those that are the things we would like to have and the things that we need to have. And why I say this because, this is where taxation is a complex case. Because there are a lot of requirements that are there because we need to have the information. But let's then think about why we need to have also this information. And this we need to have because indeed there is a lot of fragmentation in the EU and in the world regarding taxation, which can lead to issues of fraud, evasion, and avoidance. And so this is why then we have this paradoxical thing that because of fragmentation, we may ask for more reporting. So perhaps we need to also look at the source of the problem. And when we were preparing the initiatives for the BFIT or the HOT, we came across some very striking numbers and resulting from this fragmentation of tax structures across the EU. We've calculated that for a corporate income tax compliance, so not tax what you have to pay in taxes, but what you have to pay to comply, we can reach maybe 54 billion euro. So that's a lot of money that if we are indeed paying that kind of money as businesses to comply with taxation. And this is because, of course, businesses in the extreme cases would have to deal with 27 different tax systems just in the EU. And this complexity creates costs and creates barriers to businesses. And that's why, in the case of BFIT and HOT, the idea was let's try and reduce that fragmentation where we can, and at least for those businesses that may have operations across borders. This is very serious, and in DG Taxud, and not just in our directorate, but across, we are looking into what can be done for all our initiatives in terms of reducing those reporting obligations. So I think I would stay there for an introduction. I can add more if necessary.
Thank you. Maybe we'll first turn to Pascal, ask him to comment on the alignment between the various international initiatives and the EU.
Yes, good afternoon to you all. I'm joining you from Washington, where I understand there will be some announcements on the previous topic of conversation. I understand that the French finance minister and the Brazilian finance minister will hold a press conference in a couple of hours to talk about wealth taxation. Listen, couple of comments. One, go back to basics. Tax is at the core of sovereignty. Countries are sovereign in the European Union. Is reflected by the fact that you have unanimity. I don't see any move away from unanimity, which means that it's extremely hard to get common rules. There are common rules on VAT in particular. There are now common rules on tax cooperation, on exchanging information. And this has grown over time very significantly. I think over the past 10 years, we've moved from an environment where tax administrations didn't know each other. They would meet rarely in Brussels and not even, I mean, mostly on indirect taxation. Now they meet every now and then at the OECD more than in Brussels, but also in Brussels. So you have, if not an alignment of tax administrations, you have a level playing field in terms of information. And I think that's what has just been said. In a fragmented environment or in an environment of tax sovereignties, you had to put in place this cooperation. The second remark is what is the most conducive place, not the best place. I mean, theoretically, ideally, it's the European Union which should be a leader and which should just bring all the other countries behind it. Unfortunately, because of this issue of unanimity, of different profiles within the EU, of leveling the playing field, you cannot get some countries move unless non-EU countries move. So you recognize the name. If you talk about exchange of information, Luxembourg couldn't move until Switzerland would move, and Switzerland wouldn't move until Singapore would move. If you talk about base erosion and profit shifting, so the taxation of multinational companies, Ireland wouldn't move until Singapore would move. So because of that, the discussion has taken place at the OECD for the past 15 years, most recently with the Pillar 2. And the benefit of that is when there is a global agreement, the EU can import the global agreement. The downside for the EU, in a sense, is that once the rules are agreed globally, it's very hard for the EU to depart from the rules, or you include or you induce more complexity and less coherence. So these are the trade-offs. Can the EU become a power by itself? It should. But in reality, it's more difficult. Last remark is, in today's world, we have not only tax fragmentation, but geopolitical fragmentation. We can see the rise of the UN and the risk of double or triple standard, which would not be good. And that's where the EU has to play smart to ensure that we have one standard. We'll come back to complexity later, but the top of the agenda should be about simplifying now that we have a better balance between tax planners and tax administration. For a long time, it was not possible to really put simplification on the top of the agenda because of the imbalance. Now that there is a balance, moving back the pendulum towards more simplification, I think should be a priority.
Thank you. Florin, companies usually ask their tax advisor to take care of all their tax administration. So how does the profession look at this initiative to cut back burdens?
Thank you. First of all, I would like to say that I'm talking on behalf of CECAR in Romania, which is the professional organization of the accountants. But primarily, I'm a practitioner, so I'm not going to be shy saying that it's a very good business in a complex environment. But reality aside, it's very difficult. Why? Because our role as practitioner generally is really to take the pragmatic approach. First of all, to get the how it is best for companies to apply taxes, to be cost effective for them, to have also a strategic planning. And the problem is that the more complex the environment, well, it's very, very difficult even for the professionals to get to have a good service to their clients. And professional organizations and the profession, generally speaking, have a critical role in really driving that. And I know from our part, but also from our counterparts in Europe, that one of the issues is fragmentation, which already has been talked about. When I'm talking fragmentation, I'm talking first of all about how the same, let's say, tax is applied locally or regionally, and that's very, very. It's not about that it's different, but it's how the same. And the second one is that talking about profession and advocacy, we are always advocating for ensuring a feedback and adaptation mechanism, which is really hearing the businesses. What do they want? How do they think that things can go smoothly in order to be compliant? First of all, because it's important to be compliant on that, and the professional, this is what they are trying to achieve with their clients. And basically, one more thing which is quite important is when we regulate generally the activity of tax advisors. It's not about really the profession itself eventually that should be regulated, but rather the activity. Why I'm saying that? Because in the environment of tax advising, this environment is very, very eclectic. We don't have only regulated organizations, but we also have unregulated organizations. And the president today pointed out to this fact. And I think it's very important to get across and to have let's say, the same level of playing on the same in the same activity. One more thing, and with that I will close my remarks. Complexity is very, very detrimental, generally speaking, but especially for SMEs. And I'm dealing in my country with SMEs a lot, and we need to think about this part of the business and of the economy. Because we tend to think about, and it justifiably so, about big businesses, billionaires, and stuff like that, which needs to be there. But when we think about complexity, we need to ensure that the small and medium ones really are there to be transparent, to be compliant, and to be happy to pay taxes if you want, let's say, a joke, but I would say really they can be happy. Thank you.
Thank you, Florin. So Sean, turning to you, I wonder whether Tax Foundation has looked at possible ways to declutter tax legislation.
Yeah, thanks for having me. Hopefully everyone can hear me okay. So I think actually the first panel did a very good job of discussing where decluttering stands at the moment. It's something that the OECD has talked about, and obviously the Commission is looking into in various ways. So I think my comments might be better suited to give more of a better understanding at the bigger picture of why that's important. And that brings us to complexity. So Tax Foundation Europe has 4 main principles that we follow with our research and that we advocate for when we talk to the public and policymakers. Complexity, transparency, simplicity, and neutrality. Those are our 4 principles. They generally come from economic literature and economic theory about what good sound tax policy should look like and what principles they should follow. So complexity falls directly into that bucket. So I'm glad we're talking about that. I think one thing, after listening to the first panel and some of the remarks here as well, I think it's important to first say that we need to consider what tax design, what it is and what it should be for. For example, when we're talking about wealth taxation, which was brought up on the previous panel, I think it's important to question, for example, is it about raising revenue? Is it about solving inequality? Is it about punishing success? What is the tax designed to do? Because, for example, if it's about generating revenue, there are many better ways to generate revenue. For example, broadening the VAT base. If it's about inequality, you can look to Spain, that has had some form of a wealth tax for the last 60 years or so. And I would say that Spain is not the most equal society that we have. So questioning again, what is the point? If it's about punishing success, well, maybe that's a good place to start to do that. So I think the first thing to bring to mind is, what is tax for? And therefore, what should the tax be designed to do? The second thing when we talk about complexity is we talk a lot about compliance burden, and we talk a lot about the costs associated with that. I think Anna just brought that up. But I think one thing I wanted to tie kind of to the debate that happens quite frequently in Europe is this debate of tax fairness. And we mostly describe that as taxing the rich, or rich should pay their part, or big companies should pay their part. And that's fine. But I think when it comes to complexity, what we forget is that those who can afford the least a complex system are exactly those smaller and medium-sized businesses. Apple, Google, Spotify, they can afford, even if it's not the best policy, they can afford to comply to the tune of 54 billion, I think, as Anna just mentioned. But it's the small and medium-sized companies that really can't afford to do that. So if we're talking about tax fairness, really by placing more complex tax legislation on these companies, that actually hurts the ones that can least afford it. And we never really talk about it in terms of fairness like that. So I think it's important to discuss that. And the second thing I would say is that a lot of times you hear, well, these big reporting requirements or these complex tax legislations only apply to the largest companies. And that might be true by its legal terms. But I think what's also important to realize is that can have any threshold like that can have a real impact on scalability for companies. So if you are considering making the jump from being in the group of companies that it does not apply to you yet, but it will apply to you later, that can lead to a lot of burdens on you as well, and potentially change your opinion about scaling. So I think it's just important to bring these things up, because it's not something that we generally talk about in the European context, but I think it's important to include that in the complexity debate.
Thank you, Sean. Lots of food for thought, I think. Maybe we can come back to that at the end to discuss some of these ideas. So next topic on our list was transparency and the increasing calls from multiple stakeholders for information on a company's tax strategy, policy it has followed. Tax is becoming a strategic issue for management. The recently adopted European sustainability reporting standards, if you do a word search for tax, you won't find anything, but tax can definitely be material for a company and would have to be disclosed as part of the S and G KPIs. So how should the role of the tax advisor evolve, taking that into account? Should there be more communication? Should a tax advisor become more strategic rather than just legally making sure that the company complies with their legal obligations? So Pascal, I wanted to turn to you first to discuss that development. I think I've seen an interview with you where you say that tax policy should become a topic on the agenda of boards. So I would like you to ask you to elaborate.
Thank you, Jacqueline. Maybe just before responding with a plain yes, a remark, because I was not specific enough and nobody referred to FASTER, which is one of the projects of the European Union to facilitate, the Commission, to facilitate cross-border flows. So I think that should be a priority. It's a simple way to improve cross-border capital flows. Very important. Today you need to file paperwork, a lot of paperwork to get reduced withholding taxes. Clearly, it doesn't make sense. And the country is saying, oh, but we cannot rely on the private sector to do that. Look, can you rely on tax administration better when you see Cum-Ex and others? So wanted to make that point. And to echo what Shem has said, the proposal on SMEs, I think, is a good one and should move faster because SMEs don't have the resource. So I just wanted to be specific on the first question before responding to your second question with a plain yes. Do we need more transparency? Is tax a question to be discussed in the board? Yes, the world has changed. I mean, 15 years ago, tax avoidance, I mean, tax in general in the companies, as well as in the government for international tax, was an obscure topic left to specialists. Remember when I started in the French civil service and I was in the international tax policy department, we were at the end of the corridor and nobody would talk to you from the rest of the team because it was about tax treaty, transfer pricing, nobody understood, nobody cared. And that was a bit the same in businesses, in the sense that these were technical things left to tax directors who could optimize without any limit, and you could call a dog cat when it was not a cat. And you know what? Governments let it go, and so this has deeply changed. You have had for 15 years, more than that, actually, the different leaks. It started with the Liechtenstein scandal. The most recent, I don't even recall, was the Paradise Paper or something like that. That means that people care about that. Tax evasion, of course, but tax avoidance also have been less and less tolerated by the society. And that started with the global financial crisis. That's what. Two, it became a top policy issue. Rather than an obscure technical thing, it's been discussed by G20 finance ministers and G20 leaders since 2008. And I can tell you, for having attended these meetings, when tax comes to the agenda, they stop reading their notes. They speak their minds without notes. So it shows that you have political interest. How should it translate for businesses? I'm struck to see, now that I'm in the private practice, I'm not providing tax advice, right? I'm providing within Brunswick reputation advice. How do you manage your reputation? How do you improve communication? And I'm struck to see that there has been some progress towards more transparency on tax policy because of the UK in particular, where it's an obligation. But too often you will have the traditional sentence, we comply with all the laws and the regulations of the countries where we operate. And my response to that is, you'd better do. I mean, otherwise you're a criminal. So it doesn't mean anything to say you comply. You must be compliant. The question is not compliance, it's what is your policy? What is your policy and your risk management? How adverse to risk are you? Are you a good citizen? And this is what I believe has to be brought to the board. What is the reputation risk taken by companies? You have a fiduciary duty to the shareholders, for sure. You have a fiduciary duty to society as well. And that's where tax advisors have a role to play. I mean, on the next question, I'll go back to a recent standard on ethics for accountants, which I believe is also reflecting that. A last comment is the European Union took the lead there against the OECD standard. So when I was at the OECD, I was fighting back more transparency because that was not the standard agreed within the inclusive framework on CBCR, the country by country reporting, which had been agreed in 2015, subject to it not becoming public. The European Union Parliament, because it was not by unanimity, it was not considered as a tax matter, decided to make it public as of next year in 2024 accounts. So companies have a unique opportunity to prepare, to get prepared, to bring this to the board, to look at what it looks like. And I can tell you that it doesn't look good. I mean, the CBCR doesn't look good because of some deficiencies. For the tax administration, it's hard to understand. And for the public, it will be almost impossible to understand. And companies have a choice. Either they leave the narrative to others, to the NGOs, who will try to see the tax things, but also to the competitors who may see the profitability of the company on a country-by-country basis. I mean, CBCR reveals much more than tax. It also reveals tax. for public companies as well as private companies. So I'm not sure that companies have really realized that. It's not business as usual. They need to prepare. It's not really tax compliance stuff. It's more about what's your narrative, what's your position, and that raises some quite fundamental questions that I believe are at the board level. So plain yes to all your questions.
Thank you, Pascal. So I'm turning to Sean and want to ask you to comment on recent initiatives to bring more transparency on the company's tax planning approach.
Yeah, thanks. I think what's interesting, and I agree with Pascal what he just mentioned about how a lot of this public information is having an effect on company boards and specifically on management reputation, which is obviously very important. As you mentioned, there's compliance, and then there's also the narrative you tell. I think what's also important to bring up is when we talk about transparency, especially in the EU, it tends to be very focused on companies, tax evasion, tax avoidance, and those are real issues that need to be discussed. But how we think about transparency at Tax Foundation Europe is that taxpayers, including companies, obviously as taxpayers, should know what the tax that they are paying and why they're paying it. That's really what transparency means. And so I think that's something that we don't talk about as much. And as Pascal mentions, kind of the narrative and who's setting the narrative about these companies and about tax transparency. One thing that I would bring to the conversation is almost every year you have some reporter making an article about this company or that company doesn't pay their taxes and, therefore are not a good corporate citizen. I think one thing that needs to be mentioned is that a lot of times the reason that their effective tax rate is so low is because they're benefiting from government policies in tax policy that are allowing them to deduct certain things from their businesses, from their profits. And it's actually a lot of government policy that's allowing them to pay less tax because the government is essentially saying, if you are going to use your money for X, Y, or Z purpose, then it can be deducted from your tax. So it's the government trying to incentivize companies to put money in certain places, in certain areas, or use it in certain ways that the government has already decided is something good for society and it's good for the country or the EU in some cases. And so I think it's important to also realize that when we're talking about narratives, when we're talking about are the companies good or bad, or how you set your narrative, I think politicians and the public should also be more transparent and more clear about why effective tax rates are the way they are and what role government policy actually plays in setting that effective tax rate. A lot of this is going to come even more to head when we talk about the green transition, and we carve out certain investments from companies that we think are good for the environment or kind of lead us towards our environmental goals. And that can lead to the companies having to defend themselves and say, yes, we've paid less tax this year, but it's because we actually invested in these things that the government guided us to invest in. And so we were able to deduct some of our costs. So I think that's something that should also be kept in mind when we're talking about transparency. It's not only that companies are terrible and we need to make sure that they're not shifting anything. There's a case for that, but I think there's also this other side of transparency, which is why are governments setting their policies the way they are, and why are they creating certain deductions and exemptions, and companies are actually just playing along with those policy rules. So it's not just about compliance, as Pascal mentioned, but that's actually the policies that a board is setting for their investment strategy, for example.
Thank you. Florin, can you comment on how this trend of transparency is influencing your day-to-day job?
Yes, I will I will continue on what my previous speakers already said. And I'm coming from the role that Pascal was saying that the tax advisor had in the past. He was a compliance insurer, reactive. It had a reactive approach rather than a proactive approach. It had the technical expertise, and also everything was basically on short term. planning rather than long-term planning. So the environment has changed, and I think Sean has pointed it directly on the environment that we are working right now. I will just add the fact that, generally speaking, the stakeholder expectations today, investors, customers, society, they expect companies to demonstrate ethical behavior, especially in tax planning. And I would say that that's one of the requirements, or that's the factor that influences the prestige of the company. It's not the company itself, but it's a requirement from the society. So that's one thing which is very, very important when we are talking about the work of tax advisor and the role that is shifting. And also talking about EU specifically, clearly the CSRD, even if it's not saying explicitly things about tax, the double materiality basically implies the fact that the companies should take into consideration their impact on the environment and society, and tax strategies are closely looked at by the society in order to see exactly how those align with the broader society values. So coming to the role right now, clearly the tax advisor needs to and becomes more and more a proactive rather than reactive factor. Clearly is right now is getting more seats from the behind the room, the last room in the building. It's coming towards the board. So but it needs really to be prepared for that, because we're not talking about a narrow approach, but really about a holistic approach right now to all areas of business when you are talking about the tax strategy, and of course long-term partnering. Now, there are transparency. That's one thing which really tax advisors in the past they didn't think about, but right now they need to integrate to the strategy. Because it's really a risk. It is really a risk factor for the business. And lastly, I would say that the tax advisor really needs to be a communicator. He really does the bridge between the business tax strategy and the society. All those things really, they were not skills in the past for tax advisors, frankly speaking. But right now they need to realign their skills in order to fulfill those requirements. Just one thing, but I think that we will discuss further the technology approach and how this needs to be integrated into the business and their work. But that's another discussion.
Thank you, Florin. So Anna, let me turn to you and ask you the same question on the Commission's thinking about this topic. And it may not be just DG TaxUD, but there are probably other departments involved in this discussion.
Thank you very much. Well, I have various comments to make, and maybe first, Ana Xavier is a citizen, and therefore I have to say I cannot agree more to many of the things that have been said before. I think we live in a world where consumers are demanding more and more from companies at all levels, where the media can destroy your reputation in 30 seconds. So obviously it will be important that companies live up to their reputation, and part of it is about taxation. So I think we cannot disagree with that. And as we've heard also from the tax advisor point of view, then it also falls maybe a bit on the tax advisors to ensure that that is the case. Still, Anna, the citizen, I think when I was studying these things, and that's a long time ago, maybe we haven't progressed very far everywhere. It was important for tax morale and compliance that indeed we would know when we were doing our taxes what we were paying and for what. And I know some tax systems do that, but I'm not sure all of them do. So perhaps that's an area where we can improve together with more general education regarding taxation, tax compliance, and basically general fiscal matters. So that's a very general comment. At the EU level, you've mentioned the sustainability reporting standards. Obviously, that's an attempt to be a bit more transparent. It's very much sort of guided to the green area. Now, it could be that one could start there, but as I see and as I read, I would say this would be very much a voluntary thing for companies to do in the way it's been set up now, but that's just my own interpretation. What we do, if I may, in the role that I have, is we try to be transparent or more transparent when we propose policies. And I think our better regulation approach to proposals may not be perfect, but is one of the few and one of the best that exists around. So this means that when we make a proposal, we try to identify the costs and the benefits of the tax policies we are putting forward. And then we have this down the line, 3 or 4 years down the line, we do an evaluation of those policies. And we have public consultations, we have different types of consultations of stakeholders. So I think this is the way we are also trying to be transparent in the way we conduct and propose policy. And all these things are pretty much online. It's for public consumption. So perhaps in general, maybe in member states, this habit should be, or this should be made a habit. So this is some of the comments I would make at this stage. I mean,
Thank you. Let me just quickly look at my watch. I think we're slightly overrunning, so hopefully we can still talk about the third topic, impact of digitalization and AI. So as mentioned in the introduction, tax professionals will still be in demand, but the nature of their work is likely to change. So of course they have to validate inputs, embed data in a secure and responsible way with AI coming, but also it leaves more time to focus on the strategic issues of a company, possibly requiring more business knowledge by tax advisors. So Florin, can you comment on the impact that will have on the profession?
Yes, I would say that I see the impact on twofold and in two directions. One direction is the direct impact on the work of the tax advisor itself in relation with himself, in relation with the businesses and with the professionals around him. But the second one is the work of the tax advisor with the authorities in a digital environment, because it's not only the businesses that are going and the advising that are going digitalized, but also governments, authorities, tax authorities, they are digitalizing themselves. And so that's another stream of work that tax advising work is really changing in the relation with those ones. But I will refer directly to the work of the tax advisor itself. Basically, clearly, and everything is in favor of AI, generative AI, and digitalization. We're talking about efficiency, we're talking about improved accuracy, we're talking about predictive analysis, which is something new. The tax advisors will will make use of that, and they are already making use of that. And of course, all this should drive to cost reduction for them, for the businesses. Clearly, liberating, freeing time for strategic advice and as such. But with the generative AI, which is in its first years of developing, we're wondering really if there is a room for a tax advisor as a person in this environment in the future. Well, it can be. I mean, a lot of repetitive tasks will be taken over, clearly. A lot of even decision making task will be really helped by the generative AI. I've tested myself, so it gives sometimes good things. I mean, 20% of the time of the tries, maybe it gives good advice. But what's important is that the goals of the business and the way of interacting with the business, that will not be taking over, at least for the time being. That's something which needs people in order to discuss to business owners, in order to discuss to businesses, and in order to take decisions. But what's very, very important, and I'm talking right now, I know the trends right now, and I know big companies, they do have, like Sean and Pascal already said, they do have the means already to get this used and to get this at the highest level possible today. But what's important is also for all other tax professionals which are out there, really to begin thinking about that. And that's very important to identify the AI and the digitalization trends, first of all, to change education programs, really, I mean, to train their teams, really to see the trends and to see exactly what needs to be done to educate them, and to start really, but at a low risk. When I'm saying at a low risk is the fact that we are not really allowed today, based on whatever is going on with the AI, to use really sensitive data, client data, to put inside. Rather start low and then see what happens the way it progresses. And lastly, I would say that the professional organizations, again, have a crucial role on that, especially for small, medium practitioners, because really they are the first to have a role in identifying all those trends, to change the education programs, which is very, very important, and to really partner with specialized digital or technical professional organizations in order to help on this trend. Thank you.
Thank you, Florin. I think, Pascal, I'd like to ask you the same question. What is your view on how this will impact the tax profession, the tax advising profession?
I'm no specialist, so and I'm not a tax advisor, but I would concur with what has just been said, and we all see that for routine tasks, obviously AI will be a game changer. So all the compliance stuff, I mean, filing return, doing routine stuff, obviously there will be massive changes. But the more you automatize, I don't know how to say it in English, but this type of tasks, the more you need to pay attention to the value added of the human being. I mean, to the judgment call, and there will be a shift in the value chain, even more value on the real advice, which precisely calls on judgments. And that's where I referred to an ethics standard earlier. I think it's a good illustration of the challenges ahead for the profession and for the clients. You may know ISBA, which is this International Ethics Standard Board of Accountants, which has just issued earlier this week, it was on Monday, a new standard of ethics for the accounting profession and beyond the accounting profession, the tax advisors, on ethics related to tax planning. And if I had to summarize in one word their work, which is truly excellent, it is judgment call. At the end of the day, you may check or tick all the boxes. It's legal, it's legal, it's legal, it's legal. But if the outcome is not supported by substance, if the outcome is not consistent with public interest, with the protection of the reputation, it doesn't work. Will AI be able to identify that? No. Will human beings be? Yes. And that's where the value added will be. Last comment, which is a broad comment, which brings us back to the first question on the complexities. We are in a data society, data economy. So it's all about data. It's part, by the way, of the VIDA, the V18, the Digital Age Directive, right? Which is platforms collect a lot of data, and therefore we should use these. And clearly, AI will be a way to deal with the data. The difficulty we have there is that you don't add too much obligation on all the players. You should suck the information which is available in a way which doesn't necessarily make their life too complicated. I mean, they're not tax collectors, so you need to find the right balance there. So that's an interesting dimension. And then tax administrations equipped with artificial intelligence may be able to provide a quicker and better service. But here again, it will work if you have human intelligence to manage and to make sure that the right judgment calls are made.
Thank you, Pascal. Let me turn to Anna and ask what implications there might be for tax administrations and for the revenues collected from tax.
Thank you very much. I think there's several aspects to it. First, so as said, we are in the middle of a sort of a revolution. So this digitalization and AI, and the question is, of course, how deep and far-reaching these changes will be. So when we look at the impact on revenues, so from a very broad point of view, this will depend on the impact this can have, for example, on employment, which at the moment is the main source of revenues for many countries. And as Pascal said, there's this view that a very large percentage of tasks and jobs could be replaced by AI. In the past, some years ago, we were worried about robots. Now we are worried about AI, which can be a lot more far-fetching. So if, of course, many of the jobs and the tasks and the people are replaced, then we can have a problem in terms of collecting revenues. To the same extent we have today. Now, the question, therefore, is, will we lose all these jobs? And I think that there are different views. If we look at the past, all these different revolutions, let's say, the various in the agriculture, industrial revolution, and steam revolution, and so on, what we could say is that there is probably a short-term impact, well, which can be short-term in the sense of still several years to a decade, and then a medium to longer-term impact. And all depends on our ability to adjust to the changes. And I think, as was said, training will be a fundamental part to it. There is also a point which is, will AI complement or replace our tasks? And I think in many areas it will likely be a complementary factor. And that takes me to your other point, which was for tax administrations. And I think this is exactly an area where it can be a very important tool. We currently generate large amounts of data. And this data is difficult to deal with or more difficult to deal with by humans than powerful machine or software, or even more complex things that I cannot even define what this artificial intelligence is. So it will allow us to deal and digest this data. And therefore, we can understand better what is going on, and we can therefore formulate policy better. It can also allow us, and this us means the tax administration, to identify possible outlier behavior. So is there possible fraud? Is there something here that should not be here? So this is where we talk about risk management and auditing and fraud. Audits are very expensive, very difficult things for tax administrations to do. So using AI can help tax administrations pinpoint the more specific cases, and therefore do more cost-effective audits. And that is, so these two aspects help digesting the information, to evaluate policies, to allow us to do more evidence-based policy. On the other hand, also to equip tax administrations with a stronger ability to conduct audits to identify fraud, evasions, or avoidance. Now, it all goes down to our ability to absorb this and to train the people and to therefore benefit from the changes, rather than thinking a doom and gloom approach, and we will already be replaced by machines, and and the worst is to come. So that is a bit our view. So we have an optimistic approach, but of course there are risks, and we have to be aware, and we have to deal with them.
Thank you. I turn to Sean for last comment before we're still on time, I think. So maybe can you comment on the benefits of the digitalization, Sean? And are there taxes that are easier that would benefit more from automatic exchanges, for example?
Yeah, thanks for the question. I think one thing I'd like to highlight is digitalization is not going to solve every problem, and I think that's something that when we get into these discussions about digitalization and AI, it's always, well, it can replace people or it can solve this and that, and I think of course it will have benefits. But we shouldn't view it as the kind of end-all be-all of tax collection or tax policy. And I can give two examples. One, I think it can help a lot, as I just mentioned, on kind of the compliance side of things. But one thing I'd like to point out is why tax design is still very important. So in the previous panel, we heard about a global wealth tax, and I think Pascal mentioned we may be getting some more news on that type of content, maybe here in Washington soon. And it was mentioned of having a global asset registry, for example. I think one question to be asked is, even if we can technically do something with the help of digitalization or AI, should we do it? Is it the right thing to do? And especially in the EU context, there's a lot of trade-offs. There's a lot of privacy trade-offs. There's a lot of, what is the role of the state intervening in someone's private life? So just because we can do something now or we can track things now with technology doesn't mean that we should. I think when it comes to compliance, the easy answer for most people is, well, of course, we should do the most we can to comply. And I think VAT is one example. But when you start getting into people's private bank accounts and those kinds of things, there's other trade-offs that should be considered and whether you should do something or not. So that's on the compliance side. But on the design side, even if you have digitalization and even if you can better collect VAT revenue, for example, tax design is still very important. And one example I like to always point out is when you exempt or make VAT carve-outs, we always talk again about tax fairness and all of these kind of broad topics in the EU. Research shows us that, yes, it's true that as a percentage of a consumer's income, VAT can be regressive. and therefore sometimes carving out or exempting certain products can help. But on the flip side is, generally speaking, rich people and wealthy people consume more. And so the more that you are actually carving out and exempting, you're actually giving subsidies overall to the wealthier people and richer people. And so, yes, while technology might be able to help us better collect and track VAT receipts and make that system more efficient and more compliant, there's still a design question of is carving out the VAT system actually the right thing to do? And so I don't think we should be relying on technology to solve all of our issues or to fix all of our tax questions. While it may make some compliance things more efficient or more possible, I think there's a lot of questions as to whether we should be doing that and how we should still be designing our tax system. And finally, I was asked to mention a little bit about advisors and tax planners or those who work in this field. And I've agreed a lot with Pascal today, which is great. But maybe I'll disagree with him once just to add some spice to the conversation. As we like to say at Tax Foundation Europe, Pillar 2 is not going to solve tax competition. It's just going to change the nature of how countries compete and shift more to subsidy-based competition and less efficient competition. And I think a similar analogy can be drawn here, which is more regulations or more technology or more of these things is not ultimately going to change the judgment call, so to speak, of tax advisors. It's just going.
Oh, we lost you, Sean.
The nature in which they do so.
Okay. Could you repeat the last sentence? Sorry.
Sorry?
We lost you for 1 second.
Can you hear me okay?
Yeah.
Yeah, sure. So sorry about that.
No, it may be on our end.
Yeah, I think just the same analogy.
Okay, sorry, it doesn't work. Sorry.
For the tax.
Maybe we can put him on mute. Yeah.
Okay.
It worked, yeah. Okay, well, I think we've come almost to the end. So I did want to ask people if they want to ask 1 or 2 questions. I'm looking at Marion. Yes, 1 or 2 questions from the floor. Yeah.
Do I take the mic?
Yes. Okay, I think there's another question over there. Yeah.
Does it work?
Thank you.
No? No. Now it's okay.
Should I try?
Just in front of the camera for saying hello to Pascal. As president of this European Federation of Tax Advisors, I'm happy to thank you. Thank you. We know each other since I was president of the Ordre des Experts Comptables in France, right? And thank you for sharing your time, sharing your experience, sharing your knowledge and your feelings facing future. And I was very happy to hearing you saying that the EU should be the leader at international level for giving the example of harmonizing regulation. But it's not the case. And because of the unanimity rule, and you mentioned that, and there is no capacity in Europe for harmonizing taxation. And we saw that with Pillar 1 and Pillar 2, the examples for showing that today the example may come from outside Europe to influence the EU. And I just wanted to see if I understood you well, saying that the example should come from international regulation for helping the EU when some member states were counting on EU for changing their own rules. Today, we count on international regulation for that. So do you see it like that? What is your feeling about the future of the EU capacity of changing regulation?
Maybe we should regroup the questions. So I'm now turning to you.
Okay.
Maybe you can...
So I had just a question about how far we are today. into finding a balance between protecting members of organizations where the profession is regulated and into embracing the digital and the AI evolution that we're seeing today. Because more and more we're seeing actually members saying from, okay, there are AI providers, there are software providers who are pitting systems that are way less expensive, that don't fall under the national legislation, but we need to accept them, or do we need to protect our members and say from, okay, no, we're gonna fight them legally and sanction those software providers?
Okay. Anybody else for last? Okay. Please, Panos.
Yes, I've heard Sean saying in the beginning that the wealth tax will be a punishing success. It has struck me, it's a very good quote, so I think I will be using it. And I want to agree with him. And I will tell you why. Maybe he can also say if he agrees. It will be punishing success because the very rich at the very top, they will be paying, they won't be able to pay 0% tax as they pay today. So they will be paying higher. So this is very good. In a way, will be addressing their success in paying less. And so I wanted to ask if this is the way that he meant success.
Thank you very much. So maybe we'll take the questions in order. So Pascal, do you want to react to Philippe's words?
Thank you, and merci Philippe for the comment. The EU is kind of in a conundrum, and it must be quite challenging and frustrating. I mean, I heard Benjamin speaking earlier, so I have a lot of sympathy for the work he does, because whatever good idea he comes up with, the members say it's our territory, don't venture there. And that's why they said yes to the EU only where they had agreed individually at the OECD. That has been the dynamic. This dynamic is going to change. It's going to change because I think the OECD has achieved a lot, and we're probably now coming to a point of plateau where you will not see, I believe, large new initiatives and maybe it's time to consolidate on simplification, implementing the rules. Pillar 2 is extremely complex and the guidance will develop. Tax rules are always complex. If you look at CFC legislation, Pillar 2 is not that far from a CFC legislation. It took decades for countries to consolidate their CFC. Now you have a mega CFC with 140 countries working at the same time. So it's complex and the transition is costly. That said, once you will have a harmonized base, harmonized procedure, a global information return, maybe you will see some simplification. So that's the conundrum. That said, if you try to take a helicopter view, the European Union is not doing great in terms of growth. It's not a growth area compared to the US, compared to Asia. It has to do better, and simplifications, I believe, would do better. And the political context now is more conducive. This is what I tried to say earlier. There is a better balance between tax administration and taxpayers and tax advisors. And this better balance may allow for more work toward simplification, as was the case, simplification and tax certainty, as was the case, for instance, with the directive on arbitration that the EU has been able to approve, which does better than the rest of the world. So my hope and my recommendation here, I have the Bruegel hat. We're working on the next Commission's agenda, is to push for simplification. I mentioned hot and faster. The EU got much better in acronyms, so congratulations to Benjamin and the team. But these are good proposals. So I hope that the new global environment, the fact that the OECD will probably be less of a driver, even though they will develop the work for Pillar 2, that the EU could be the place where, in spite of unanimity on these procedures, and so member states would get more common sense, I would say, and would favor simplicity.
Thank you. So maybe we can go to the second question. I don't know, Florin or if you were be happy to take that.
So it's nice to, yeah. If I understood you well, your question is about software providers who are getting into the market and addressing to all, not only regulated members, but all. Yeah. Well, that's really a commercial aspect to it. A professional organization cannot intervene directly into whom the software providers are targeting. So basically, that's not something which a professional organization can do ordinarily. However, the professional organization, through its member, can always advocate about its members' value, about their services and what they can do for the society, for the clients, and for the businesses in general, and getting, I mean, one way or another, canceling a bit only the idea of targeting of a software provider or any provider, getting to someone to say, look, if you get this software, you'll be the best in the market or something like that. So it's in the remit of the professional organization to argue and to market, if you want, the value of its training, its members' training, ethical behavior, and whatever they can provide to the value of they can provide to their clients. Software also, what it can be done, it may be to acknowledge all the market, and especially its members, but all the market, about the value of software generally, and how can a good software or other provider of AI or whatever can look like. So awareness, but getting directly, no, I don't think it can do.
Thank you. So maybe we'll turn to Sean. Hopefully our connection works. We lost him completely. Okay.
Can you hear me okay?
Panos, you will have to take it up with Sean. He's still there? Yeah. Sean?
Here, if you can hear me.
Yeah. Yes, we can.
I don't know if you...
No, it doesn't work. Sorry. So maybe the two of you can take this offline.
Can you hear me now?
Sorry.
Okay.
So many thanks to all the great panelists. Very thoughtful comments. I'll hand back to Philippe for final words. Thank you.
Very quickly said, for closing this conference, I really want to thank all of our speakers. It was very, very, very much interesting. And frankly said, I appreciate a lot all what has been said. It was very instructive. Of course, speaking of future, nobody in the room is able to say what will be the future. And I appreciate when Benjamin starts saying that, okay, but before future, let's speak of present, because there is a continuity between one mandate and another one. And you very wisely mentioned the work on the table today, announcing an evaluation in next month on the DAX 126, the H directive on the table, and the Pillar 2. So we know that some topics will keep going on, and that's important to know. Well, we had the vision of a politician, of a member of the parliament, and it was good to have that vision as well, because they play their role. And when Isabel, she was right saying that don't forget the composition of the EU Parliament. With the election, some changes may come, and it's impossible today to say what will be the future and what will be the next composition, as we probably may see more anti-European members of this Parliament. So there is sort of danger, I would say, for the ones who are in favor. And Panayotis wisely called the attention, thank you for that, on the economy. Well, it's good to speak of tax, but what is the base of the taxation? And we should first to have a good economy. And today we know all the dangers on the economy. So before speaking of revenues, we should see how to help the economy, and there is quite an uncertainty. And thank you, Bart, for, on behalf of the profession, calling for less complexity and uncertainty, because we are facing that. We have to assume that for our clients, and we are really in front of that. And we know that our clients would have more added value of our service doing something else and spending more time in advising than in compliance. So this first conference on the future was very much interesting, and the second one regarding the future for tax advisor was excellent as well, as we have a good overview of what is going on, and it's not a dream. It is here today on the table. For example, speaking of digitalization, and Anna mentioned the interest of the public administration for collecting data. We know that, but it is not a risk for the profession, and it was very clearly said by Florine and as well by Pascal, that the profession will have a role to play, a role for helping the business and in particular the SMEs. They will need us. They will need our help for how to manage this digitalization, how to organize it, how to manage it, and how to keep an eye on the issue. And the reference of Pascal on the YesBar standard is excellent, referring to the professional judgment. It's not only good to tackle the boxes, but to have that professional judgment, what is the role of our profession, and to keep some distance on the materiality, but to analyze. And that is the main role of the profession, to be committed to this to such a responsibility. Otherwise, the robots will do the jobs better than us, and there is no future for the profession. But we can count of our role because of this ethical standards we have, of this independence role, the independence rule we have, and this independence is a strength of the profession in front of all the business, and mentioning the tools we can find on the market. So as a conclusion, I keep the one very good point mentioned, that tax policy should be on the agenda of boards. Tax policy today is to be shown, is not to be hidden like it was before. And people care about tax evasion. People care about taxation. It is a political interest on the table today, and there is an expectation for ethical behavior from the business, and this is a requirement from society. What means the importance of taxation, and the importance for tax advisors to be by the side of the business, for helping in going that way, starting by educating them, and giving the good examples. And well, this is the path towards sustainability. Sustainability not only a matter of environment, but of societal behavior, and the position of any business on the market. And that is a role for the profession for educating the client of each tax advisors. So we have a good future, and there is a long life in front of tax advisors and of the profession of accounting. So thanks very much for your participation, for your presence, and I hope you enjoyed this conference. Now we have a glass together, and we can share our impression, feelings, and we'll be happy to speak with you. So thank you very much.